Are you presenting something too? Are you presenting? No, what do you need to present? Do you need to present everything? Yes, they'll have to share. Whoever is, now I have all of the items. They sent me everything. I can do it from here for you. You just have to let me know. Do you prefer me to share everything? Okay. So basically the way you do it, if I'm understanding correctly, is you go through each item and whatever they downloaded from the website, you pull up and you're just showing it as they're.
Yeah. So,
Got it.
I usually don't.
What do you usually? Like no minutes? Do you have what you want me to share?
You don't need to share the minutes. We usually just go through.
Okay. So all of this just go to starting with no directors. There shouldn't be anything. The report, receive update, that's from them, right? They're going to be doing that? The folks from the outside?
I believe. I guess so.
Right, that's what I was,
Yeah.
Justin Pratt's supposed to be sharing the 9 and 10. 11 is supposed to be price page. So if they don't, I have their stuff here. So like if they are on the audio and say I can't.
Then when
12 is Justin again.
then for Gordon for the experience reports, just bring up attach the consultants report.
Here. 13 this?
Yeah, just that one.
Okay.
So while he's talking, I'll kind of follow
what he's saying and go through it. Okay, okay.
And then what's the next one?
14 consultants report on timeline.
Yeah, so just bring up the consultants report again.
Staff report. Is that it?
No, that's the agenda item.
Okay, so they don't have.
Is there? Which number is that?
14.
14. Okay, yeah, that's the one.
Okay.
15. Yeah, the staff report is fine.
Okay.
There's a consultant's report that's attached to 15.
A consultant's report. Yes. COVID-19 report.
Yeah.
It's a 2-page.
And then there's a second one.
They don't have that in here either.
We'll figure it out.
Oh wait, here it is. Attachment A.
Yeah.
Yeah. Okay, here it is. Sorry, it was an attachment. Okay.
It should be.
Yeah, we'll get it. I think they might have.
The important one is the experience
what's called a waiting room.
report with the graph.
Until that waiting room opens up,
13.
we'll start probably here in a minute. I will stand by just.
So I'll make sure. And wherever if I'm not, just let me just look at me and give me whatever you want to tell me. Now let's first make sure. Huh? That because Marie helps him through here, right? Because you help, what's his name, do his presentation. You want him to do it from there?
You want Gordon to do it?
Right. Yeah. Supervisor Brandel, are you there?
Yes, I am. Can you hear me?
I can, thank you. Just testing to make sure that you are. Can you hear us?
Yes, for sure.
Okay, perfect. Well, we are going to get started here in just a few moments. Give us.
Okay.
Oh, I'm gonna move them all over.
I was gonna say, he needs to powder his head, so there's a big glare coming off that.
Hey, Steve, you look a lot better on a computer screen than you do in person, buddy. I can't hear you.
That's
You gotta
good.
turn on
We
your
don't wanna
microphone,
hear
bud.
you. That's right. I don't know.
Can you change the background, Steve? Where's your beat scene?
We can't hear you. Unmute yourself. Yeah, unmute Steve. There you go.
There we go.
Now he can share all his brilliant intellect with us. Notice the
Are you
silence.
there, Supervisor?
No comment.
Yeah.
You should show everybody the picture.
Don't tilt your head forward anymore, Steve.
Hey, all I know is I really like Peter Wall the most I've ever liked him. It just, it's a still photo. You can't really see expression. He's just sitting there, right? So we have no clue what he's doing. No.
Very good. All right, it's 9 o'clock, so we will call this meeting to order, and we will start with the Pledge of Allegiance. So everyone will stand. Salute, pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
You.
When we do the Pledge of Allegiance, if we have a bunch of people on Zoom, just pretend you're saying it.
Well, no, that's perfect. We mute them. We don't want them to get out of
Right,
whack.
because they're about 2 seconds behind us.
We're doing it in a round.
Yeah.
All right. Roll call, item 3.
Good morning. Director Brandow,
Here?
Director Crocker,
Here.
Director Magzig,
Here.
Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Present.
Very good. So we have a quorum. Next, item 4, we'll go to approval of the agenda. Have a motion to approve?
I'll make
Comment?
a motion we approve as presented.
Motion by Vanderpool, second by Mendez. Any further comment? Let's take a roll, all votes will be roll call votes today, so call the vote.
Director Brandow,
Yes.
Director Crocker,
Yes.
Director Magzig,
Aye.
Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Aye.
Screwing her up. Very good. Motion passes unanimously. Counselor, do we have need for closed session?
There is no need for closed session today.
Very good. Item 6 is public comment. This time, any member of the public wishing to speak on items within this board's jurisdiction but not on today's agenda, please feel free to speak now. Anyone in the audience? How about on the phone?
There is not any calls.
No public comments. Excellent. Go to item 7, approval of minutes.
So moved.
Have a motion by Director Magzig, second by Director Shucklian. Any further comments by board members or the public? All those in favor signified by saying aye. Aye.
Aye.
All opposed? Any abstentions? Motion carries unanimously. Oh. I heard all ayes. Roll call. My apologies. I said I was going to do roll call.
Director Brandow,
Yes.
Director Crocker,
Aye.
Director Magzig,
Aye.
Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Aye.
It's almost like I predicted that. Motion carries unanimously. Next, we'll go to item 8, SJVIA Director, questions, announcements, activity reports. Any director wishing to state anything for the good or bad of the order? Seeing none, we'll go on to item 9, receive update from Auditor Treasurer on cash flow projections.
Ladies and gentlemen, members of the board, good morning. Just acknowledge if you guys are hearing me okay.
Yes.
Okay, perfect. So going into our cash flows projections and what we've currently experienced through the third quarter, we're on the first slide here. At the start of our calendar year, you can see we're still seeing a steady overall increase in our cash balances. At the end of last year, our claims expenses was a bit lower than average, which you kind of see go back up a bit to kind of even things out. But as you can see, around late March to April, when the pandemic started to become recognized globally and the shelter in place occurred, we start to see that our peaks and valleys that we're used to seeing kind of even off a bit. Claims expenses went down in April. Our average went down to 138, which is normally about 163. Dental expenses went down by about 62% overall. And we're seeing a lot of our normal claims fall below what we normally have projected for this time at this year. As our outflows slightly decrease, our inflows are remained mostly the same. It's been very steady and consistent. So much that on the 21st of April, we saw a new high mark in cash balances, meaning what we have in our Chase Bank and what we have in our investment pool at about 21.4 million. Our highest weekly average to date at the end of April is 20.1 million. So our inflows are still coming in. Next slide shows our current cash flows and our projections for May and June. At this point in time, with the change in trends due to the pandemic, we didn't feel it would be worth time to revise our projections. We just want to kind of see how it's going to affect us starting at the beginning of next fiscal year. But the upward trend is going to continue. Does anybody have any questions on cash flows?
Yeah, this is Nathan. I've got a question. So I appreciate the presentation, but are we factoring in that we might take a hit to cash when there's a lot of things which have been delayed, orthodontic appointments, dentist appointments, doctor visits, that do we have an expectation that in the next quarter, to the extent that people can get back out and get these visits that they've delayed, that we're going to see a hit to cash there?
Yeah, absolutely. We're probably going to start to see a hit towards mid to late June, but most definitely at the start of the new fiscal year. We'll probably see dental claims go back up, average daily claims go back up. So we'll see this at the start of our projections for the next fiscal year, for sure.
Other questions, comments from members of the board or public? Seeing none, we'll go on to item 10. Go ahead, Justin.
All right. Next item is our third quarter financials for SJVIA. First, we'll start on our estimated statement of net position. At the end of March, the balances we had in our bank accounts and our investment pool was just over 17 million. Interest for the third quarter in our investment pool comes up to about just under $72,000. Which we'll talk about more detail later as far as how much we're earning in our interest. As far as payables go, we have County of Fresno actives from the middle of February to the end of March to be paid, and a few other County of Fresno payables. So that comes up to just under 3 million in accounts payable. As far as unpaid claims, there's just about $1 million in claims accrued. Unpaid legal expenses, and a few small administrative items. All these put together, bear in mind that our unaudited financials don't take into account IBNR. But that being said, this is the first time in quite a while we're actually reporting a net position, not a net deficit. Our net position at this point is 609,000. And last quarter, it was a deficit of 2.7 million. So we are making some incredible progress there.
Now, quick question. IBNR is critical to our plan. How many millions of dollars do we still need to be fully funded in IBNR?
I think Borden would probably have a better answer at this point, but we project that IBNR is roughly about $5 to $6 million. which goes into effect on our audited
And
statements.
something too I want to point out, aside from IBNR and the millions of dollars it's needed there, we still have total liabilities at 17.6 million. So we've got tremendous liabilities that we need to be mindful of. We can't turn a blind eye to that.
Yeah, absolutely. And if our cash flows continue to rise as they have, by the end of the 2021 and middle 2022 fiscal year, we will be in a position so we can take care of some of those liabilities, namely the loans to the County of Fresno and County of Tulare, which we are in a position now to take care of, but we still want to keep building our assets and our cash balances to keep up with these liabilities and any other things that might occur in the future.
So Borden, to be conservative, how many millions do we need to come up with to fully fund IBNR?
We have an actuarially certified IBNR number that comes out twice a year. And I believe the last one that we gave you, I don't have the exact number, but I believe it's like $6.5 million in IBNR.
Thank you.
All right. Next slide. I'm sorry. Were there any other questions on the statement of net position?
Real quick, Justin, just a question. When looking through the note section that you have on the unaudited,
Yes.
I was just hoping that it would. I mean, when you read it, it obviously spells it out. But do you normally spell out dollar amounts, or is it usually listed as a number?
You mean as far as IBNR?
No, I'm talking about the loan. I mean, I think it's important. If you read it, it says it. But I mean, when you see a $9 million number, that jumps out at you a little bit more than NINE, I think. But I'm just saying for ease of visibility, it's a real minor point. But in the note, right below net position.
Right. And that's just to account for the fact that IBNR is not included in these statements.
Okay. That's fine.
Yeah, every other part of our liabilities for SJVIA are there. It's just that one thing. Did I answer your question?
Yeah, that's fine.
Okay. All right, move on to the next slide. Actuals versus budgeted. For the third quarter, our receipts totaled just about 30.9 million, which was about 2.5 million higher than what we expected, while our disbursements were roughly about what we were expecting, which resulted in a difference or a change in reserve of $3.3 million. And as of the year to date, our change in reserve shows that we are bringing in $4.7 million more than what we are paying out, which is again exceeding all of our expectations that we projected at the start of the year. And next slide shows where all the administrative expenses are going. Administrative costs are about normal. There's a bunch of legal expenses that we are accruing, but we haven't received yet. So the majority of that's going towards legal services, which is brings us to a total to date of administrative expenses of about 2.3 million. Next slide goes into our cash balance detail throughout the year. We started with a cash balance of about 13.4 million in July, and as of now, our cash balance is just about 17.8. So over a 4.5 million increase from when we started at this time of the fiscal year. Does anybody have any questions?
Any questions on the phone? None in the room. Thank you for that.
Thank you, guys.
We'll go on to item 11, receive our 2019 audited financial statement, and I believe we have someone from Price Page and Company on the phone or in person. Phone.
Good morning, everybody, members of the board. This is Fausto Hinojosa. I'm the managing partner at Price Page and Company. Glad to be with you here this morning to share the results of the June 30, 2019 audit. And I will be brief, but I don't plan on spending time looking at the June 30, 2019 numbers because you just received a good presentation regarding your current financial status. However, I think it's important to talk about the audit process and certainly the results of the audit for the 2019 financial statements. Very briefly, just about our firm and the audit team that was working on your audit. It was myself as the audit partner. We had Uzman Ilyas, who is an audit manager who has about 20 years of audit experience. Larissa Murrin was a CPA as well. And I think this is her 4th year working on the audit for SJVIA. Even as I listened to Justin's presentation, I was reminded of the competence that the accounting team, himself and Megan, and up the chain really there at the county, that they have in preparing the financial information, which certainly helps with the audit process. A few things about audit process that I'd like to share. The audit is looking at 2 things primarily. It's looking for error and it's looking for fraud. It used to be a time when CPAs were afraid to say that they were looking for fraud because they didn't want to get sued when something happened. Well, auditing standards resolved that several years ago now and said, no, auditors do have a responsibility to make sure that the audit certainly addresses any fraud risks. So as we are looking to assess the risks for SJVIA, our job is to obtain an understanding of the financial operations and certainly of the financial statements, and to take a look at the internal control processes and ask 2 questions. Number 1, are the controls effectively designed? And that is about policy and procedure. But number 2, are those controls placed in operation? An organization can have great policy and procedure, but not follow that policy and procedure. So from an audit perspective, we need to address both. Number 1, that you have good policies and procedures to mitigate the risks of error and fraud. But then number 2, ensure that those internal controls are being carried out. So after we obtain that understanding of where the financial risks might lie, and thank you for bringing up that the financial statement there under auditor's responsibility. After we assess where those risks might lie, then we develop audit procedures to see if any of the things that we think may have gone wrong have in fact gone wrong. And that's really what the audit does. Assess risk and then perform tests to determine in those areas of risk whether anything has gone wrong. Again, either errors or fraud. So that's the audit process. If we go to the next page here in the financial statement, the auditor's report, we get to our audit opinion. So our opinion is an unmodified or clean opinion, and that is what you would and should expect. And that opinion, if you read it, says that the financial statements are fairly stated in all material respects in accordance with generally accepted accounting principles. So the audit opinion never talks about financial stability, financial viability. What the audit opinion does, it says the numbers that are presented are fairly stated in accordance with the accounting rules. It then becomes management's job and with those charged with governance to interpret those numbers and to make decisions with respect to those numbers. It's not the auditor's job to, again, tell the management or the board that they're doing great or that they're doing poorly. And sometimes I get those questions when we present to some municipalities as an example, or other agencies. But the auditor's job is simply to say, these numbers are fairly stated. We've performed the audit test and you can rely on these numbers so that you can make management decisions. So a few areas of audit emphasis, and again, not going to spend time on the numbers in the financial statements, but just to share with you the areas that were emphasized in this year's audit, certainly cash and investments, the unpaid claims, which is a big number. And yeah, we can go to the balance sheet here, just so that the board can see where we were spending time. And certainly we would be spending time on the largest numbers. So cash and the investments, you see that number there. There was a discussion about the IBNR, so that under the liability section says unpaid claims and claims adjustment expenses. That $6.9 million number was the number IBNR, which comes from an actuarially certified report, and you know that. It's our job there. That's a big estimate. We're not actuaries, and so we don't recalculate that number, but we do perform procedures to determine that the actuary received the proper and right information, and that they're certified, and those sorts of things. So moving to the next page, the numbers that we focused on the income statement, which here is called the Statement of Revenues and Expenses. Certainly member contributions, and then claims expenses. So our audit really focused in those areas. We performed tests of transactions, analytical procedures, and also incorporated an element of unpredictability. Audits by necessity require planning. And so the way that the audit process works is that we will send Justin and the team a list of items that we need in order to review records. But as auditors, we're required to incorporate an element of unpredictability. So not everything, we should not make them aware of everything that we're going to be looking at. That's just an audit requirement that, again, we incorporate that element of unpredictability, and we have done that, or did that rather, in the audit. So I'm going to jump now to towards the end, please, to the Government Auditing Standards Report. I'm not going to spend time here with the footnotes, although those are the footnotes that are required by generally accepted accounting principles that provide disclosure regarding the financial statement numbers. But I'd like to get to the second audit report, just a few more pages down. Yeah, sorry, yeah. We can keep going. It'll be coming up. Thank you. Yeah, so here's an independent auditor's report on internal control and on compliance. So as a part of the audit, as I shared earlier, as a part of the audit that's done in accordance with the American Institute of CPA audit standards, where we were required to obtain an understanding of internal control to develop audit procedures. This is a different set of standards. This set of standards goes beyond the AICPA standards and requires that we assess any internal control deficiencies and that we categorize them, and then that we report them, which is a bit different from the AICPA standards. Pleased to report that there were no internal control deficiencies that were required to be reported. And so those internal control deficiencies, just for information here to the board, we as auditors might identify a control deficiency, and there are different levels of it. So there is a control deficiency. It might be a significant deficiency or a material weakness. And as auditors, we make judgments about the control deficiency that we have identified to determine how significant and material it is. As I've already shared, fortunately, you do not have any internal control deficiencies. In fact, the financial statements are prepared by Justin and the team there, and we had no audit adjustments. So in other organizations that you serve, you might get an unmodified audit opinion on the financial statements, and that's great. However, in that audit process, the auditor still identified some accounting error that was required to be corrected. The auditors propose an adjusting entry, management accepts that entry, posts that entry, the financial statements still receive an unmodified opinion. The difference here for SJVIA is that we didn't identify any accounting errors, therefore no accounting adjustments were reported. So the initial draft of financial statements that was prepared by Justin and the team were fully in compliance with generally accepted accounting principles, and we had no issues there. So the second part here talks about compliance. Also, we did not identify any compliance matters that need to be reported to the board. We're not attorneys, obviously, and so we're not looking in the same way that legal counsel might be looking at compliance. Our job is to assess those laws or regulations that might have a direct impact on financial statement numbers. And so within that broad objective, we can report that there were no compliance findings to report to you. So I think the final piece that I'd like to share is some required communications. So there was a separate, what we call an audit committee letter, but it was issued as well with the financial statements. And we don't need to bring it up here, but I can just very quickly share those items with you. There were no changes in significant accounting policies in the year. The significant estimate was only the IBNR, which is included in the footnotes to the financial statement and reported on the balance sheet. We had no difficulties encountered in performing the audit. Management was, the accounting team was transparent. They responded to all of our inquiries in a timely manner. I've already reported we had no audit adjustments at all. We had no disagreements with management regarding generally accepted accounting principles. So that was a good thing. And again, no fraud or illegal acts. So that ends my presentation. I'm glad to answer any questions that the board or anybody might have.
Any questions from the board? Members of the public? Thank you, Fausto, for that. Looks like you're off the hook.
Awesome. Great.
Oh, we're off the hook? Okay. Keep them on their toes. Go to item 12. Delegate investment authority to the auditor, treasurer, and adopt revisions to the SJVIA investment policy. Justin, you're back on?
Actually, it's Megan.
All right.
Good morning, everyone. I'm going to go ahead and handle this one. As we brought to your board last year in our May meeting, this is a policy that needs to be updated and represented to you on an annual basis. So that's what we've done. You've been provided with a clean copy and a red line copy. And in looking through it, the one thing I really want to point out is that in section 1.0, the purpose, we originally last year presented to you this section, including only the first paragraph. This year, we came in and added the second paragraph to further clarify under which government code and which section of your JPA agreement that this investment policy is established. And then the majority of the rest is just some cleanup language. We did have this reviewed by both the County of Tulare and the County of Fresno investment officers' perspectives, and everyone is in agreement. And so we just kind of either updated some things, clarified some language, or otherwise just made it a little bit better for us for this coming year. Since we've established last year to this year, we've received interest of over $245,000 for the monies that have been on deposit within the County of Fresno Treasury Pool. Whereas with Chase Bank, we've earned just over $9,600. Right now, Mark wasn't able to join to help us. He's our investment officer. Right now, he told me yesterday it looks like it's the pool is at 1.91%, which is down from last year's presentation where it was 2.15%, but still light years better than the annual rate of 0.14% with the funds on deposit at Chase. So if there are any questions I can answer, I'm open for them at this time.
So this is Nathan, just a quick question. So the difference in the amount of money we had in Chase Bank versus the Treasury pool was how much?
Let me see here. I'm just gonna pull up one thing. So if I just look at, because every Monday we do an internal look at this, we had, as of 5/1, we had 17.3 million in the county treasury and 1.6 million in Chase Bank, total of 19 million split between the two. So the overwhelming majority we're keeping in the county pool as long as possible to generate those interest earnings.
And again, the interest earnings were 245,000. So, all right, just wanted to see if it was a 50-50 split, or clearly it makes more sense to keep as much money as possible in the treasury pool.
Correct.
Banks aren't going to pay any more close. Any questions for Megan? Comments? This is an action item. I entertain a motion. Moved by Director Mendez, second by Director Shucklian. Any other comments? Please call the vote.
Director Brandau,
Yes.
Director Crocker,
Aye.
Director Magsig,
Aye.
Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Aye.
Motion carries unanimously. Thank you for that report. We'll go on to item 13, get our experience reports.
Borden Darm with Keenan Associates. Good morning. Before I get into the experience report, if I could, I looked up our last board meeting in February to refresh my memory regarding the IBNR. And as the auditor stated, the June 30th, 2019 position was a little over 6.9 million. In February at our board meeting, the board took action based off of the actuarial valuation that was done to increase the IBNR to 7,096,000, so just under 7.1 million. So the IBNR was increased by 171, and that's for an end date of December 31st, 2019. Within that 7.1 million, there's $89,400 set aside for the runout that we're realizing now for the city of Marysville, which left the program. And I will say that through the first 2 months of that $89,400, only $7,830 have been realized. So a very light runout on the city of Marysville. This experience report gives you a look at the first 2 months of 2020, how we performed there. Since the report was written, I also have a little bit of an update for how March has performed as well too. In total, for the first 2 months, the medical program realized a reserve buildup position of about $1.7 million. The dental program was in a very minor position, surplus position of $6,227. And I think here's an important note. If we look at dental for March, we went from 6,200 in a surplus position to 78,000 in a surplus position. So $71,000 was increased. That there is not necessarily reserve buildup that's not going to be used. It's basically people not being able to get to the dentist, most likely looking to reschedule at a later point in the year. So we have to be very cautious relative to those type of dollars, how we look and allocate them relative to this. So to say that those dollars are reserve buildup it's correct, but we expect a spike in utilization, most likely starting June and into the third quarter of this year. Okay. And then the vision position is in a minor deficit position, but we're fully insured there, so there's no risk relative to the SJVIA. For 2020, Keenan has calculated a total reserve buildup of $6.5 million. That's kind of the target for the year. And there are two main components that need to be addressed relative to that. Approximately $4.5 million of it is our normal reserve accumulation, but then the other $2 million is really a result of the EPO parity that we put into place. In other words, we put in additional margin for the County of Fresno on the Kaiser rates to offset any shortfalls that might be realized on the EPO program. So we're looking to accumulate $2 million on the Kaiser surplus and, but realize that that may be called upon to pay expenses on the EPO plan. So,
Real quick, Mr.
Yes.
Chair. Borden, thank you for bringing up that point, because when I was reviewing this, I couldn't help but look through this it's going to be in a few slides, but on page 5, where you talk about the EPO, that's almost a deficit $3 million on the EPO plan.
for 2019, correct.
For 2019. So 2018 wasn't a surplus year either, was it, for the EPO? I believe the point that I'm making is you know, we do a lot of work to structure plan design in the best interest of both individual counties and the SJVIA's financials. And at what point are we going to look at modifying or maybe eliminating the EPO option?
So in 2018, it did come in at a $820,000 surplus.
Okay, so there was a positive. I just know that we had a bit of a trend there on the EPO where it was deficit.
Yeah, no, and you're absolutely right. It was actually, it's call it $4 million is really what the deficit position was last year on the EPO. The parity that we've put in place, again, we did pass on an increase to the EPO. Those rates, the Kaiser rates and the EPO rates are set one and the same in an effort to migrate healthier lives onto the EPO plan, because we did see a difference of about 5 years in the age differential between Kaiser population and the EPO population. So with that, we looked to this parity model to build reserves on the Kaiser lives there to help establish a better baseline. The EPO is self-sufficient through the first 2 months of 2020 with an overall position of just over 600,000. But I can tell you March was a deficit position, which wiped out about half of that. So we're sitting at about 300,000 on a surplus position still on the EPO for the first 3 months. The HMO parity created an additional 900,000. So we have over the first 3 months. So we have that to offset any deficit positions that the EPO might come into. Okay. So if that strategy works, we may not need to look at design modifications or elimination of the EPO.
Okay, thank you.
You're welcome. Of the $6.5 million that we're targeting on the total accumulation through February, we were at $2.9 million, or we've accumulated 44.7% of that. We were at a very similar strong start at the beginning of last year, and then we just coasted kind of flat through most of the next 6 to 8 months. And as a matter of fact, approached the fourth quarter wondering, are we going to hit our targets? We eventually did, but it's only because we had favorable experience in the fourth quarter of 2019. So we're cautiously optimistic. We will say this, that we do expect that over the next 3 months, April, May, and June, we would expect that the reserve buildups increase. As we look at our renewal season coming in, the preliminary renewal is completed based off data through May, and the final renewal is based off data through June. So we're going to have to be very, very careful to basically not say, oh, our loss ratio is way down, because as soon as we make that assumption, we're going to be hit with July and August and September, which we're anticipating could potentially be deficit months, and will hopefully even the guild up a little bit. But so we'll be very, very cautious in our underwriting approach relative to that. We're very much aware of it, but we will be sitting most likely in a stronger cash position going into the third quarter but also knowing that we'll have a stronger cash layout during the third quarter as well, too.
Gordon, are we expecting any kind of a hit related to COVID-19? And what I mean by that is, I believe that all insurance companies have to pick up the cost of testing that's being done. And I don't know how many of our members are going out and getting tested, but I've had people who've gone out and they got private tests. They received a bill for over $1,000 just to be swabbed. So do we have any expectation of how that's going to impact just cash in general?
We do. We actually have 3 agenda items dealing with COVID-19 coming up. The one is on testing, one is on treatment, and the other one is, the last one, item 17, it really addresses an estimate relative to cost. And so I'd like to defer answering that question until we get to that agenda item, if you're okay with that. But yeah, we will be looking at these cost estimates and so forth. I can tell you that the test kits themselves from CMS, they come with a price tag about $51.31. But then, of course, that's just the test kit. That's not the administration of it. And so I can also tell you that to date, we've had 18 people covered under the Anthem plan, or not to date, but from the report I received, that have had tests. So not a lot of membership has gone out. Unfortunately, for our Kaiser population, that data is going to be delayed in getting to us for quite some time.
And then another question I have is related to COVID-19, and I think this is really a question more maybe for the Fresno County Board of Supervisors to consider. Is there a way that we can kind of triage all of the costs related to COVID-19? And would this be something, maybe the $82 million that the County of Fresno received, we could attempt to maybe use that pool of funds to help the SJVIA, since I think that the pool of funds are made available to some counties that are of a certain size to deal with COVID expenses. I only bring that up because if we see a huge hit to SJVIA, and if there's an opportunity to shore up some of those costs, I'm just one member, but that's something I think we need to look at.
And maybe we can have those COVID-19 funds go to repay the loans from Tulare County. That'd be a nice little financial boon for Tulare County, right, Jason?
Yeah. We're putting salt in an open wound.
The obvious claims, like the tests and things like that, but we can research that. I don't have an answer to that, but we can talk and research if that may be something that's reimbursable that could help offset some of these costs.
And when we get to the agenda item 17, we'll talk a little bit more about what the expected costs are. There's some cost offsets, as well as the variable of the cost to the SJVIA varying based off the infection rate. So we'll get into that there. I did want to draw your attention to the page 5, which shows you the budget versus actual model for reserve accumulation. I just wanted to make sure that everybody saw this year. We show you in the budget as well as in actual the plan experience for the medical, the plan experience for dental broken out, the Kaiser reserve accumulation. Both County of Tulare and County of Fresno both have a reserve accumulation for a deficit repayment for IBNR and stabilization of the SJVIA built into it. And then you can see there's another line item relative to the parity. That's the reserve amount that we've set aside to, basically it's shown here in reserve accumulation because we are reserving it, but it's really, the intent is to offset deficits of the EPO should they come. So we'll see how that all plays out as well too. And then our prescription drug rebates. This year we expect to see about $1.6 million come in prescription drug rebates. It could be as much as 1.8, but we'll see as the year develops on that. Any questions relative to that? Beyond this page is just a lot of individual information that I will not go into unless directed. For sure.
Any questions by directors? Anyone on the phone with questions? All right, thank you, Borden. Why don't you go ahead and take up item 14?
Yes, thank you. Item 14 is just kind of an outline of the renewal process that we will be going through as we prepare for the 2021 rate developments and so forth. The renewal letters have all been sent out to our carrier and vendor partners at this point. That was done on May 1st. June 8th, we expect to get the information back, and June 8th through 19th, we'll do our preliminary renewal analysis. We'll do carrier negotiations and look at renewal strategy development as well too. June 22nd through July 3rd, we'll prepare the preliminary report for staff's review, and then with staff's review and comments, we'll prepare that such that at the July 17th board meeting, you'll be able to see the preliminary renewal, what it's looking like. We'll look for direction from you at that board meeting relative to finalizing the renewals. And then after the board meeting, we'll add the month of June relative to experience. That's consistent with what we've done over the last 4 years, and develop the final renewal. We'll work to do final renewal negotiations with the carriers. August 3rd to 10th, we'll prepare the report. That report will go back to the SJVI staff for review, and then it'll be presented to the SJVI board for the August 21st meeting. Any questions on the timeline?
Questions?
Thank you.
All right, we'll go on to item 15. Rhonda, taking this one. Turn on the mic, your mic. On the screen, maybe? Yep.
On the screen?
No, you're
Okay,
on.
thank
Yes,
you.
Got
Item 15 is a request for the board to approve plan design changes for our Anthem self-funded plan to cover the COVID-19 testing, so that members do not have to pay for the cost of the tests from March 18th through May 31st. And then we're also asking for delegation of authority for the SJVIA manager and assistant manager to extend those plan designs through July 31st, 2020, if it is required by the state or federal law. We will be meeting again in July on the 17th, but it may be necessary for us to take some action prior to that meeting, and that's why the request for the extension. We have administered 18 tests through the Anthem plans to our members, and the estimated cost for those was $4,590.
How many total members are in Anthem?
Do you know off the top of your head, Borden?
Yeah, the total membership, I can.
Oh, for our
The reason I ask that is, if we have, let's just say, 3,000 members there, we also have to include, is this a family type arrangement where it's the member plus family? So I'm trying to look at just exposure, and then I'm gonna, in my mind, I want to do a worst case scenario where 100% of the people go and just have this test. Are we looking at like $1 million hit? Are we looking at a $2 million hit? Have you quantified that yet?
Yeah, so from the experience report in February, under the Anthem plan alone, we had 6,952 subscribers. So that doesn't include their dependents. And if you include dependents, you can add the relationship between dependents and subscribers is about 1.5, 1.6. So if you want to count all belly buttons covered under the
Call it
anthem
like
plan.
12,000, maybe?
That excludes Kaiser, of course.
Sure.
So you would add that component as well. I think in total, when I recently did an analysis, including Kaiser, I came up with a number closer to 15,500 with Kaiser and Anthem blended together.
So someone can correct me, but at 12,000 multiplied by 255, I'm at a little over $3 million, potentially, that could cost if 100% of belly buttons chose to go and have this test. All right.
If they chose to have it one time.
Yeah, and two, with it is, if you do get it, sometimes I've heard that you have to take multiple, you have to take an additional 2 tests after you take the first test showing a positive before you can be cleared. All right.
Correct. That is correct.
And I think the law's requiring us to do this anyway. I just want to make sure that we're prepared for the fiscal impact depending on where this virus goes. So 3 million if everyone gets a test one time.
Yeah, and you're exactly right to your point about multiple tests. I know that from personal experience of family who have gone through this, that they're requiring 2 negatives after you've had a positive. So they're going, if you've been tested positive, you're going to go back in at least 2 more times to get a negative before you can be completely cleared.
We're also finding with our general population that we've been testing, you can test negative, let's say day 4 after you think you've been exposed, and they may be going back in several days later and getting retested because then they're having symptoms. So we've seen where somebody could be tested as many as 4 times because they'd have to do the 2 negative in order to be released from the 14-day quarantine.
Any other questions, comments? Folks on the phone, this is an action item to approve the design changes.
So moved.
Moved by Director Magzig. Second by Director Mendez. Madam Clerk, will you please call the roll?
Director Brandau,
Yes.
Director Crocker,
Aye.
Director Magzig,
Aye.
Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Aye.
Motion passes unanimously. Item 16. Paul, you taking this one?
Paul Nerlin, SJVI Assistant Manager. So item 16 before your board today is a report from Anthem Blue Cross. Many of our fully insured plans in the state, including Anthem Blue Cross and Kaiser, have made the decision to cover COVID-19 treatments. In looking at the potential impact, to be clear, the coverage that is being talked about is only limited to the maximum out-of-pocket for every member. So you'll see in the second page of the report, it gives you an idea of what that would look like depending on the plan. As your board has just talked about, although we've seen our numbers going up in our financials, there's a lot of uncertainties that are still out there. Last year we began very positively, and then we had a very difficult year in the middle of the year. We already talked about funding the IBNR at $7 million. We've talked about the loans for $9 million. We've talked about funding potentially $3 million if everybody got tested once, but there could be multiple tests. For all of the uncertainties that are out there, staff recommends at this time that we do not take that recommendation to cover COVID-19 treatment until we have a further assessment of what the impact might be to the plan. We would come back at the next board meeting to share based on the experience that we have, but this item is to confirm that direction to staff, and we can answer any questions that you may have.
Any questions for staff? Comments? This is an action item, correct?
Correct.
Staff recommendation. Entertain a motion. Moved by Director Shucklian. Second by Director Mendez. Madam Clerk, please call the roll.
Director Brandau,
Yes.
Director Crocker,
Aye.
Director Magzig, Director Mendez, Director Pacheco, Director Shucklian, Director Vanderpool.
Aye.
Motion carries unanimously. go to item 17, receive consultant's report on COVID-19 cost impact analysis.
Okay. Our Keenan and Associates, our parent company, is Assured Partners. They came up with one of the first models that's out there that looks to estimate what the cost impact of COVID-19 is relative to a health plan and an employer that would be covered under that health plan. And so I took the liberty of running the SJVIA data through that model, and there are a variety of different factors associated with this model, and came up with some ranges based on the infection rate as to what the cost impact could potentially be. I do want to draw your attention, there is one typo in the agenda item under the description. If you look 7 lines down, the sentence starting with Keenan's intent of presenting this model is for the SJVI to gain 100% confidence in the model's outcome. That is not the intent. So the word "not" was missed. So it should have read, Keenan's intent of presenting this model is for the SJVA not to gain 100% confidence in the model's outcome, but it should be considered as a point of reference along with other indicators. So this is just one indication of many that we'll be developing and so forth. The basis of the model really shows that with the SJVIA, it looks not only at the COVID-19 costs, but it also looks at the offsets to cost. A lot of the offsets to cost are related to those non-essential services that aren't necessarily going to be scheduled into the future, but just aren't going to happen. So for instance, as we look at the month of March and April, normally if you would have seen a doctor for a sickness, but your doctor was not available, and you're no longer sick, hopefully, not COVID related, but other related symptoms, that would have been a reduction in claim cost that is not necessarily going to be happening out in future months. And as people look to use telehealth or text-based services like the County of Tulare has with 98.6, those type of services that were rendered there will not necessarily appear in the future. So it's basically shown as an offset. On an overall basis, unless the infection rate impacts greater than, from this model, impacts more than 10% of the SJVI population, there's actually a positive impact to the plan. If you look up to on the second page on the chart that's been put together at 10% infection rate, you see that direct COVID-related claims are estimated to be 4.5 million, but they're offset by non-essential claim offset of 4.8 million, such that the impact is to the plan is about $348,000. So currently, best estimates are we are well below 1. We're probably below 0.1 infection rate at this point in time. We don't know what the future will bring. And the reason I say this should be one point of reference, if there is a miracle cure that comes forth relative to COVID-19 and it's a pill, and we kind of see the same thing that happened a few years ago with Hep C, where Harvoni and other drugs came out that were a cure for Hep C. And the initial price tag was $100,000. Well, if that's the kind of price tag that's put on this, this model is blown out of the water. And so I just want to make sure that we're cautious relative to that as well too. But unless according to this model, unless the pandemic really gets above 10% of the population, we don't necessarily believe that there'll be a negative impact due to COVID on the plan. Any questions?
Questions, comments? Anyone on the phone?
We'll look to bring other indicators to you as well as they're developed, and we gain access to them. This is one of the first ones that I wanted to bring to the board, though.
Good. Thank you.
Thank you.
All right, last item is adjournment. Got a motion to adjourn? What's that? Yeah, we have a motion by Director Mendez. Second by Director Shucklin. All those in favor, or do we don't need to vote? Do we need to vote? We need to do a roll call? Aye. We're adjourned. How about that?
I sensed real sadness in Buddy's